Today is our second financial bootcamp workshop, and we have two professionals here who are going to be talking to us today about tax considerations, which is extremely important. And as we were talking about before all you got on the call, can be really complicated. And so hopefully what today is able to do for you guys is give you guys some really good resources and tools and connections to people who can help you. So with that, I'm going to introduce our two guest speakers. The first one is Robyn, and Robyn is actually one of our expert office hour consultants. And so you can meet with her, and I'll drop that in the chat as well. But you can actually meet with her if you schedule a time to do so. She's a CPA, and she's been a CPA since 2004. And she started her own consulting business in 2017. And she really works with those businesses to help them be what they want to be, to give them any advice that they need regarding accounting. And then we have Diane Hagerty, who's here, and she's going to be speaking to us today as well. She's an enrolled agent. She's licensed to taxpayers before the IRS. She has a BSBA in accounting and business management. She has over 25 years helping small businesses with taxes, and she actually has an office right off the square here in Fayetteville, and she's been there for 10 years. So we're really excited to have both these professionals here today. And there's going to be a chance for you to ask questions and engage with us. And so as always, I encourage you to use the chat feature as much as you'd like. Feel free to comment, feel free to ask questions. I usually moderate those questions for our guests. So please feel free to jot those there. Another note about today's session is that we have some things that are going to be coming through the chat, which are links to actual resources or documents that are going to be helpful for you to open as the presenters are talking about them. And so just maybe even have your chat up so you notice these things coming through, and we'll kind of tag you or say that they're through and you should open them. With that, I think we're ready. So I'm going to pass it off to Diane. Thank you so much for being here.
Hey, everybody. Can you hear me okay?
Sounds great.
Okay, good. I was trying to figure out how to open the chat, and it's like, oh, okay. Trying to do everything at once. Again, I'm Diane Hagerty. I'm an enrolled agent. And in order to tell you what that is, I'm going to say what I'm going to say through the whole thing. And that is read my blog. I have a great blog post on what enrolled agent is. Basically, I am licensed to stand between you and the IRS. You get nasty letters. I represent you, and I can tell them how it's going to be. Well, sometimes I try to, but anyway, all 50 states recognize an enrolled agent. So if you have trouble with sales tax, payroll taxes, anything at the state level, they recognize my credentials as well. So that's where we're at. Robyn, did you want to introduce yourself at all here? Because she's probably going to stop me and be like, hey, what about this? Which is a good thing. So
Hi, I'm Robyn. I've been a CPA for like you said, almost 20 years. So what I do is I try to make sure Diane has nice, clean numbers for her to do taxes. I don't do a lot with payroll and sales tax unless someone gets behind, and then I help them catch up and figure out, what payroll taxes need to be paid and what sales taxes need to be paid. I do a lot of catching people up, and a lot of with new businesses, getting you started on the right track. So that's how we kind of work together.
And we do work together a lot. Almost every day we have a discussion about somebody. So anyway, okay, so I'm going to get started. I'm going to go really, really, really fast. If you have a question, put it in the chat, or if you really have a question, be like, wait, what? Just slow me down, because I have a lot to cover and I want to do a lot of questions and answers at the end. So I'm going to try and get through all my material by 12:30, 12:35, and then we can talk for about 25 minutes afterwards. So everybody's here because they want to start a business or have started a business. And one of the biggest questions I get is, well, how do I get legit? Like, how do I become official? Like, what do I have to do? I have to form an LLC. I have to do all this stuff. I'm like, no, if you have made a sale and you have made money, you're official. That's it. That's what the IRS thinks. That's what, most things happen. If you have made a sale, if you are selling something in pursuit of a profit, you're already a business. You don't have to become legit. You don't have to do anything. All you need to do is make money. If you are doing that, when you file your taxes, it goes on a form called Schedule E. It's about 3 pages after your regular 1040. You can no longer file the super easy form. I think they have everybody on the same form now. It gets added on another page. It's a little bit complicated. We're going to get into Schedule C later, but if you're making money, you're a business, period. That's it. Okay, so things that you might need to do if you're just self-employed and you don't want to get any bigger, you just want to just starting out, you'll make a couple sales. If you are not operating as, well, I'm going to use me for an example, Diane Hagerty accounting. If you are working as, ABC company, you need to have a DBA, which means doing business as. You file that at the county courthouse. So if you're in Washington County, the county courthouse is at College and Dixon, costs $25. It's a filing fee. Real simple. You have to go down there. You have to have a form notarized, take them $25 in cash. And then you can use that piece of paper that they give you to go open a bank account and do business as ABC company. You cannot cash a check made out to ABC company if you do not have a legal doing business as at your bank. Or you can prove that to the bank. So, that's real easy. It takes half an hour to take care of. The other thing you need to consider is getting an EIN, an employer identification number, but I don't have employees. Why would I need that? An employer identification number is something that the IRS hands you out at no charge. Believe me, there's like 50,000 websites out there that if you're like EIN online, ooh, $29.95. No. It is free. There's thousands of scam sites. Stay away from it. The IRS will issue you an EIN number. Why? Because you don't want to give out your social on everything because of identity theft. It's really easy to get scammed on stuff like this. So be careful. You can get an EIN number for free. You can open your bank account with that EIN number. So the IRS knows who you are. And you can pass that number out to everybody on all your forms, your 1099s, your employees, anything you need to put it on, bank loans, but you don't need to attach your social to that because you don't want to be giving your social out, right? Okay. All right. If you are also self-employed, the next step up from there is what I call a contractual partnership. Verbal contracts are legal. You can go into business with your boyfriend or your girlfriend or your brother-in-law or your mom or whatever. I cannot say this enough times is come back, talk to a lawyer. I'm sure we have lawyers that come in here and get a partnership agreement in writing. Do not do business on a handshake. I have had so many partnerships fall apart where I'm constantly chasing after the other partner, chasing after this, chasing after that, because you didn't get it in writing. So great. One guy puts in $20,000. The other guy's going to do all the work. Well, I don't feel like doing the work anymore. I got another job. I just don't have time for this company. And what happens to your $20,000? Can you sue the guy? How do you get your money back? If you don't have a contract, you don't know. I've had a lot of partners just grow tired of being in the partnership. Get a better job, have a kid, get sick, and they don't hold up their end of the partnership. And if you don't have a written partnership agreement on how to deal with that or how things change, you have a big problem. So if you're going into business with anybody, be sure to get it in writing, who's responsible for doing what and what happens if they don't do it. And I strongly suggest having a lawyer. I've seen so many bad contracts. In fact, Robyn and I just saw a horrible contract a couple of weeks ago. Yeah, we laugh at you. And it's like, okay, well, I'm going to pay you this and I'm going to buy your business. Yay. Well, what happens if he doesn't pay? Oh, they didn't put that in the contract. So A, it's not a legal contract because there has to be an or else. If you don't put or what at the end of your contract, it's not a contract. And there's no way to enforce it. So this guy could have lost all of his money, but fortunately they figured it out between themselves and we're still okay. But it's terrifying. It's the stuff people get into. Get it in writing. So anyway, and the other thing I always say, if you're going into business with somebody, it is more difficult to go into business with somebody than it is to carry on a marriage. Marriages, you can have children and relatives and holidays and all that stuff, fun stuff. You don't get any of that with your business partner. All you do is argue about money. Your entire relationship is arguing about money. So be sure you really like this person and you have very good agreements on how to treat each other and who's responsible for what, because seriously, all you do is argue about money. It's very difficult to be in business with somebody. It sounds like, yay, let's go into business. Let's start a restaurant. Yeah, no, don't do it. Anyway, think long and hard before you go into business with somebody. So that is self-employed. You just start making money. Easy peasy, right? So what happens if you don't want to do it that way? Now, I'll get into the reasons here in a little bit, but they have ways of separating yourself where this is your business, this is you. We could either form an LLC, a limited liability company, or an incorporation, which is a corporation. I use the word incorporate to talk about both, which means, you know, setting yourself aside as a separate body, you know, a separate entity than you. So why would you do this? Why would you even bother? I'd give everybody 3 reasons: liability, insurability, taxation. If any of those 3 things come in, you really need to think about incorporating. Liability, a lot of people think, oh, limited liability company, and people think about corporations, and you learn this stuff in business school, and it's like, oh, I'm not responsible for anything I do outside the business. So no, that's really wrong too. A lot of people think liability is something, but if you're a company, if one of your employees, you're mowing grass and they mow over something and they throw a rock through the window and they send it through a $10,000 piece of art, okay, that's a liability issue. Okay. If you deliberately do not pay your bills and you don't follow through on a contract and you deliberately spray paint one of your clients' houses, oh, but it's the business. No, you are liable for your actions. It doesn't limit that. It limits your liability on things that could go wrong. I have a client now that's thinking about renting out cars for a particular reason. And I'm like, oh, no. You're letting somebody else drive one of your cars. You don't know what kind of driver they are. Okay, that's a huge liability issue right there. You don't know if they're going to wreck your car, if they're going to kill somebody in it. You need to separate that liability from you. That's one good reason. Insurability comes right underneath of that. Some people are required to have insurance. Workers' comp is one of them. If you are required to have insurance because, well, nobody requires you to have insurance. It's just silly if you don't. But if you are taking any risks on anybody else's property, if you're mowing or cleaning, or if you're in somebody else's house, you have the potential to break their stuff, you have a liability issue. If you make a claim on your business insurance, they will probably automatically cancel you the next day after. They'll pay out the claim, but then they'll cancel you. And then you're never going to get business insurance again because they don't have to sell it to you. It's not like car insurance where you have to eventually go down the ladder and somebody will sell it to you for some price. Not true. If you make a claim on your business insurance, you will probably never get business insurance again. So here's the twist, plot twist. Just dismantle your company, start over the next day, start a new company, and you can start over. And you're not uninsurable because now it's a different company. So it's a dirty trick, but it's the way the insurance companies work. You can get away with that. So if you have a really bad claim and the insurance has to pay out, something goes wrong, it's not over for you if the insurance, if you're separated from a limited liability company or an incorporation. And finally, taxation. That's my big one. That's why most people come to me to form LLCs, is they're starting to make too much money. We're going to talk about self-employment tax here in a minute, and it's steep. It's a lot of money. And there's ways you can filter your money through the corporation, pay yourself a salary, and lower your taxes. I'll get to that in a few minutes. That's another whole taxation thing. So stay tuned, don't leave. That's kind of an important part there. So what's the difference between an LLC and an incorporation? Why do most people have LLCs? LLCs basically are pie. It's a partnership. It's divided up however you want to divide it up. It's pie. The entire company has to agree to sell off their piece of pie and how much, and whose shares get diluted. A corporation is a little bit less paperwork. It's a little bit more paperwork, but it's a little bit less paperwork if you want to add a partner, get rid of a partner. You cannot sell your shares to your friend down the street without approval of everybody on the board, or at least a majority vote. You are not a stock exchange. You can't sell your stocks, but it is a stockholder basis. So if I sell half of my shares to somebody else, my shares get diluted by half. You know, if I give up some of my shares, everybody else is worth more. It's basically just a huge math problem and how things are divided up. I tell everybody in corporations are more paperwork. And if you plan on adding partners, losing partners, physicians do this all the time. As professional associations, and they're generally in corporations. Everybody else usually works out better as an LLC because there's a lot less paperwork and there's a lot less disclosure. Really simple. I keep seeing the chat. I'm seeing if people are asking questions. So anyway,
That's just me.
what does it
I'll
cost?
let you know.
That's okay. I have costs on here. Setting up a separate entity than yourself does cost money. It's not free, and it costs you money every year. You have to pay franchise tax every year. You have to file a separate tax return most of the time, or at least file separately for your business. You have to pay an accountant most of the time, unless you're really good at doing your books, which unless you're an accountant, well, you're probably not good at doing books. So it does cost money. And it costs more money to make it go away. If you form a separate entity and the next day, I have that happen so much time. I'm like, are you sure you need this? You're already making money. We've got this, right? Got it. I got clients lined up. They come back to me next year. What happened to your LLC? Where's your business? Oh, well, nothing ever became of that. I'm like, it's going to cost you twice as much to make that LLC go away as it did to form it. I promise you. It costs more money to make it go away because you got to pay 2 years of taxes, dissolution fees, and then you got to pay me to do it. So it's, don't form an LLC. Don't jump in and be like, I need an LLC. I need to be official. No, because it's gonna be a money sucker. And if you don't need things bleeding you of money unnecessarily when you're starting out. So start slow, and we'll get there. And I'll let you know when you're there. If you look down here, it says hats. And why did I put hats? Is that a typo? No, it's actually hats. I once in a while I have these 3 cute little clip-on hats, but I'm not going to put them on today. But you wear 3 hats when you have an incorporation. You are the main investor, or you and your partners are the main investor. You're the board. You're the people that own the company. And in that place, you elect somebody to run the company. You elect a CEO that makes the day-to-day decisions on how to run the company, which very well may be you. And then you hire an employee to do the actual work on the day-to-day basis. That's not the administrative work, but the actual work, you know, graphic design, laying bricks, whatever it is you do. And so you very well may wear 3 hats. You might be the employee, the boss, and the chairman of the board. And you have to act separately in all 3 of these positions, and you pay yourself differently for all 3 of these positions. Again, that's where self-employment tax goes. I'm really getting there. But it is a little confusing because sometimes you sign as president, and sometimes you're the quorum board members, and sometimes you're the employee. And you have to be able to realize that you have 3 different jobs. If you're a single member LLC and it's all you, you basically have 3 jobs with that company, and you need to make sure that you're fulfilling the duties of all 3, which is a little confusing, but we'll get there. Tax elections is the last thing here in this section. A lot of people are like, well, I'm going to be an S corporation. Why didn't you talk about S corporations? Because an S corporation isn't a thing. You're either an LLC or a partnership or an incorporation with the state. The state tells you how you're set up. The state, I mean, the federal government doesn't set up local laws. The states set up how all this runs. You pay it to the state. If you care to be taxed as an S corporation, you send in a form to the federal government, to the IRS, and you say, hey, I'd like to be taxed as an S corporation. LLCs can be taxed as a partnership, 1040, like Schedule C. They can be taxed as a C corporation. They can be taxed as an S corporation. You have to elect how you want to be taxed if you decide to be an LLC, even if you're the single member. So everybody's like, well, am I an S corporation or an LLC? I'm like, you're both. It's 2 different things. It's apples and oranges. It's not the same thing. So a lot of people get really confused on that. Again, I tell everybody, do what you do best. You don't see me out there laying bricks. You don't see me trying to find a vein in a patient. or do surgery or anything else. I don't do any of that. So please don't pretend you're an accountant, and I'm not going to pretend I'm a nurse or a bricklayer. Get help and get a team behind you that knows what they're doing. Get people that'll give you correct answers. Anyway, let's move on to the next section. Taxes, taxes, taxes. I'm sorry, go ahead. Yes, ma'am.
Can you explain how you can be a partnership without being an LLC?
Yes. You can be a partnership just strictly in contractual means. I strongly suggest you get a partnership agreement, but if you don't have one, you're still a partnership. It doesn't make you any less legitimate. If you go into business washing cars with your friend, you're a partnership. And if you don't specifically state how things are set up, we have to default to state law, which is generally whatever you put in and is what you, and whatever you take out is what your percentage. So if somebody puts in more money than the other one, then they're a majority owner, and they can kick you out. So be careful if you're doing verbal partnerships, get it in writing. But yeah, if you have a partnership, you need to report that separately. There is ways. No, only if your partner is your spouse, do you not have to file a separate tax return for a partnership. You can split it 50-50 on your tax return if your partner is your spouse. But if you have a partner that you are not married to, you need to file a separate 1065 partnership return and pass out K-1s to all the partners. And that sounds like a lot of, what? I didn't sign up for this. We're just washing cars. I'm like, but that's how it works. You need to report it all. Federal government mandates, all this stuff. So we're going to get to that stuff in here in a minute. Let's get to taxes. There's one I forgot to put on my note sheet. So I'm going to start with that one, and that is commercial property tax. You are in the state of Arkansas. I don't know if this is your home state, but if you are operating business in the state of Arkansas, your county wants a cut of your property tax. So, but I don't own any real estate. I know they want a cut of your assets that make you money. And I went down, I talked to a lady a couple of years ago, and I was like, I have a lot of clients that just flat out don't have anything. They don't have a desk. They don't have an office. They don't have furniture. They don't really have anything. They just work out of their house. You're like, do they have a computer? Yes. Do they have office supplies? Do they have pens? It's like, yes. Well, they need to report those, a computer and office supplies, or we're just going to reject it if you say you don't own anything. So the first time I filed for commercial property tax, I had a desk and a coffee table that I got used, and some chairs I picked up for $10, and an old couch, and a couple of filing cabinets. I didn't have much, I had a really small office. I was just down the street from where I am now. And in there, crazy, I put everything down. Okay, I own this, I own this, I own this. And my tax for the whole year was $6. So it's not a tremendous amount if you're not paying tax on real estate, but you are required to report. And oh wait, when is commercial property tax due? Oh wait, tomorrow. So if you did assess last year, it's due tomorrow. If you haven't paid it on your cars and stuff yet, well, guess what? It's due tomorrow. So yeah, I got to remind everybody of that. So the next one is franchise tax. I did write a blog on this. It should be in the, Stacy should be posting links on that. What is franchise tax? Franchise tax is merely the right for you to have a separate entity. I have so many people say, oh, why did I pay the franchise tax? Like I didn't do any business last year. We never started that business. It doesn't do anything. It doesn't matter. You paid for the right to have a separate entity, and it's going to cost you $150 a year paid to the Secretary of State every year. In May, you have to fork over $150 to the Secretary of State for the mere privilege of having the right to do business, whether you do it or not. You also have the right to keep that name. Whatever you named your business when you formed it as an LLC, you have the right to that name, and nobody else can use it in the entire state. That's great. If you're an incorporation, it may cost a little bit more, but most of the time it's $150 for everybody. It's super simple to file, but you have to pay that every year. If you don't pay it every year, it starts to back up and then they revoke you. And then when you try to go get a loan, I get this so many times, it says the bank said I'm revoked. What does that mean? Like, because you didn't pay your franchise tax like I told you to every year in May. So I do have a blog post on that if you want more information. Wow, it's 12:27. I gotta hustle here. All right, tax. There should
There's
be a
no
handout
rush,
for
Diane.
sales.
You're
Okay.
so good. Take your time.
Okay, there's a sales tax. There is a handout for sales tax in the chat, I think. If you are doing anything on the list that I'm sending, it is taxable. Yes, if you are selling things, yeah, you charge tax on it. So if you're doing hair and you sell shampoo, great, shampoo is taxable. Things like, obviously you're going to pay tax on things, but services are taxable in the state of Arkansas. There's a complete list of services. So if you are mowing grass, you need to be charging your clients tax, sales tax. If you are cleaning anything, if you're cleaning houses, if you're cleaning cars, if you are cleaning, you need to be charging sales tax. And I had one lady, she was old and not real smart, but she had been cleaning houses, right? And the Department of Finance and Administration, like, they see that she's filing her income. She's reporting it as income. It says she's cleaning houses right on her tax return. She puts it on her Schedule C. They're like, well, why aren't you charging sales tax? She's like, I don't know. But it doesn't matter because they audited everything she did, every bank statement, every transaction, everything with her husband, every single thing that went through a bank or cash or anything they could trace. They went back 3 years to figure out everything they charged her for sales tax. Every deposit, she had to prove what it was. Sales tax audits are awful. They are the worst. They're worse than any IRS audit I've ever done, and I've done a lot. Sales tax audits are cruel and horrible. You do not want one. So please charge sales tax, look at my list. If you are doing any services in Arkansas, if you are cleaning anything, if you are renting anything, if you are repairing anything, if you are installing anything, please look at the list. There are exceptions. There are many exceptions if you are doing original construction. So if you're, installing brick or flooring or something in a new building, that's different. That's completely different. That becomes part of the real estate, not taxable. So there's so many exceptions and exceptions to the exceptions. And I could spend 3 hours telling you what's taxable or not. And Robyn calls me up at least, once a month or so. It'd be like, is this taxable? I made a list. Please consult with somebody, even if you call the Department of Finance and Administration and find out what they said. It's highly likely that you may be needing to charge sales tax on what you're doing. One thing about sales tax everybody seems to forget is you collect it from your customer and you remit it to the state. This customer is paying it. You get to collect it from them. You get to keep it in a nice little pile. It stays in your checking account. It stays there to the 20th of the next month. It's a nice little pile of money that's keeping your checking account nice and positive. Then on the 20th, you need to part with that money and send it to the state. It is not yours. And some of the biggest problems I have with people like in trouble, where their business is in trouble and they're not going to make it, is because they did not pay their sales tax. They treated it like it was cash, like it was part of their cash flow, not like a pretty little cushion. No, it was part of their cash flow, and they were paying bills with the money. It just got tossed into the slush fund. And, yeah, we all run super lean at the beginning, but it's not your money. Do not pretend it's your money. And if you can't not pretend it's your money, get a separate account to put your sales tax money in and deposit it every day if you have to. But that is not your money. And if you collect it from your customers and you do not send it to the state, they get what I'm going to say is a little cranky. And by a little cranky, that means if you don't do that 2 months in a row, they will come and shut you down. They will come in with their tape, they will lock your doors, they will close your cash register, and they will kick out your customers. I have seen them close down a gumball machine. And the guy that had it in his store, like the gumball machine was provided by somebody else, was like, get out of here, just like taking the gumball machine out, trying to throw it out in the street to get, so the guy wouldn't have his vending machines in his office anymore. Like they will shut you down. They are not, they're nice people as humans, but their job is not nice. And anyway, Another thing that's not your money, we're going to move on to the next one, is payroll taxes. If you withhold taxes from your employees' paychecks, you do not pay them the whole amount. When you have a job and you make $10 an hour, or 11, I guess 11 is minimum wage now. If you make $11 an hour, you do not get $11 an hour in your paycheck. Some of it is held out for Social Security, federal taxes, and state taxes. Where do you think that money goes? It's in your boss's bank account until he has to pay it out. And when you're the boss, it's in your bank account. Again, nice little cute pile of money. Oh, look, I'm not negative. I didn't bounce any checks today. No, it is not your money. You need to pay your payroll taxes. And the federal government takes that very, very seriously. And they will take your house. They will take your personal stuff. They will hold you personally liable. Forget liability, limited liability companies, forget corporations. Whoever's supposed to pay the payroll taxes, they come after you personally. Do not mess with payroll taxes. I've seen companies get closed so many times because they failed to pay their payroll taxes on time. They're due when they're due. If you don't pay them, that's it. So if you can't afford to pay your payroll taxes, maybe you need to get rid of a couple employees or restructure your business. You're doing something wrong. That's some of the things where I really smell smoke, where your business is not viable. You're not doing good when you're dipping into the tax money. Go ahead.
One thing about the payroll tax, the federal government, it takes them longer to come find you. So by the time they figure out that you're not paying your payroll taxes, you owe them a huge amount of money.
Yes, they're slow and they don't care. And it's not like they're going to come after you the state will come after you after 2 months. The federal government, it may be 6 months before they even tell you haven't paid. Oh, by the way, your $5,000 now has a 25% penalty on top of it. It's $6,500. Oh, plus penalties and interest on top of the penalties and interest. So yeah, do not screw with the federal government. Sorry. I do have you should get a link to it in my blog, is how do you tell if your employees are employees or contract workers? I'm going to say most of the time they're probably going to be employees. Payroll taxes are not optional. Payroll laws are not optional. I have had so many people, it's like, I don't feel like, it's so much hassle, the taxes and this compliance. I got to file this form. I'll just pay everybody cash. What could possibly happen? What could possibly happen is your employees are like, wait a second, I'm an employee. They file a form SS8 for a permanent determination. They get determined as an employee, and then the federal government comes after you for all the taxes you should have paid. Had that happen more than once. And I've had employees do it more than I file out the paperwork and send in the form. I was like, no, you're absolutely an employee and they should be paying payroll taxes. I play both sides of this. So yeah, it happens. So let's talk about income tax. If you are self-employed, you file a Schedule C. There should be a link to that. So it shows what you can deduct, what you can't deduct. There's a lot more than you can deduct. If the other expenses, you can break out everything, things on the form or things that they definitely want separated out. So if you are keeping your own books, those are the things you want to separate out, like advertising and rent and things like that are on the front page. So you definitely want to look at that form to see what things you should be deducting. If you are a partnership, yes, ma'am.
There's also a place for other expenses. You're not limited to the ones on the front page.
Absolutely. You are not limited to the ones on the front page. You can add categories of things that are not included. Anything that it costs you to make your money is a business deduction. So So it's a little bit complicated. There are limitations. I can't get into a whole lot of specifics. I do have a handout for things you should be deducting with some rules on there, but definitely I can't get into every nuance of every rule. But definitely, oh, there it is. Business deductions printable. That just popped up. And that should automatically download as a PDF for my website. But that's kind of a reminder on that. Okay, so if you are a partnership, or an S corporation, you will get a K1. You need to file a tax return for the corporation and your part of the income will come through on a K1. There should be a K1.
Yeah, we do. Would you mind answering this question? Do you see it on the chat? I'm going to read it out loud, but does business lunch count as a deduction? For example, taking employees out to eat or holding a food event?
Yes, yes and no. There's lots of nuances to meals, but I will go over that. That's a really good question. If you are out of town, over 50 miles away for over 8 hours, you are out of town, and your out of town meals do count because you're out of town, you can't come home. If you are having a meal with a client, you do have to buy for the client. The rules have changed on that. Before, you only had to meet with somebody, you could buy your own and not buy your clients. You can't do that anymore. You actually have to buy for the client. So if you have coffee to discuss a contract, if you're meeting with your coworkers or colleagues, other people, you're self-employed, so I mean, people you work with. So say I take Robyn to lunch and we talk about clients. Yes, that's a business lunch. How do you deduct this stuff? What you really need to do is keep your receipt and write on the receipt who you had lunch with and what you talked about. Because if you get audited, they're going to want to know, and you're not going to remember all this stuff. You might. If you keep a calendar, a lot of people, like insurance people, they keep a really detailed calendar selling insurance. Every single person they met with, what they talked about. And if it was at Starbucks, then you have a record of it and you can supply that record. You don't actually need to, hand out particular receipts, but you do need to keep track of what's the business relation. Just because it's lunch, I have so many people in construction do this, that it's like, oh, I just bought lunch for the gang. I just bought lunch for the gang. You can't buy lunch for everybody every day. That's excessive. You can buy lunch for everybody on Friday. You can buy Gatorade and water for everybody so they don't die if you're working outside. I mean, you can do things like that, but you can't just constantly buy meals for yourself or meals for, your immediate family coworkers every day. I mean, the IRS will question it if you get audited. Meals are one of the things that get audited pretty frequently. They're generally done by mail. Like you'll get a letter saying, what are all these deductions? And you can respond by mail. And if you give them a good enough answer, they leave you alone. So keep all your records. Keep track of who you're having lunch with. Where was I? Oh, the difference between corporate income tax and personal income tax. I have so many people that are partnerships and S corporations that are being taxed through pass-throughs. You agree to pay the taxes of what the business makes. The business makes money, it filters through to your personal tax return. If you are a 10% partner, you pay taxes on 10% of the profit. What is the tax rate? Well, it's your tax rate. If the 10% partner makes $400,000 a year, he's going to be paying a way higher tax bracket than the main partner who makes 90% of the profit and doesn't have another job. And, they made $20,000 all year. That's going to be taxed at a much lower rate. So everybody pays at their own rate. If you are an old-fashioned corporation, like operating like Walmart or Microsoft, and you have shareholders, when you pay a dividend to a shareholder, that is not a deduction, and it's taxable income to the partner. So not only does the corporation pay taxes on its income, the owners pay taxes on any dividends they receive. So any dividends you received is already after tax money, and then you pay tax on again. So a C corporation is the least profitable way to be, but some people can, some companies, that's the only thing they qualify for. The bigger you are, the more likely you are to be a regular corporation. S corporations can only have so many partners. They all have to be humans. There's a lot of rules on S corporations, and partnerships are really scary accounting wise, but that's okay. You can do, there's huge partnerships with hundreds of thousands of partners. But we'll make those decisions when you're not a startup. Record keeping. Boy, I wish I could spend more time on this. We need to go with, it's what I tell everybody is what actually happened. And a lot of people, but Mom, my grandmother gave me some money and she said I had to pay her back, but then I didn't have to pay her back. And then like, well, I made this thing, and well, I found this thing in the dumpster, and well, I got this stuff for free, and this other guy was closing down his company and he gave me this stuff, and well, I put a personal credit card, but it's actually a business expense. So what actually happened? You need to track all these crazy things as if they're completely normal. None of it is crazy stuff. People give me all these stories like, oh, well, I did it this way. It doesn't matter. My personal car, well, I use it for business. Do I need to, I titled it in the business's name, so it's 100% deductible. Not if you're picking up from your kids from school in your car. It's not 100% deductible just because you. So what actually happened? What do you use the car for? The biggest thing is I always tell everybody is what actually happened. What did you mean to happen? If you wrote yourself a paycheck and you never cashed it, you never wrote yourself a paycheck. It needs to come off the register. You know, a lot of business owners do that. They write themselves a paycheck and then they never cash it. Well, I didn't have the money to cash it. Well, then you never wrote yourself a paycheck. So you don't get to deduct the wages if you never cash the check. So there's lots of crazy things that people think are crazy, but it's a lot simpler than go with what actually happened. It was one of the best advice I ever got from an IRS agent ever, which is usually bad advice, but anyway. There's a list of things on page 2, basic methods of record keeping. We started out with box of receipts. Next step up is journal or bank statements. I have one guy, he's a plumber. He hands me his bank statement. He writes down what every check was for right there. He writes down what every expense was for. This was car insurance. This was workers' comp. You know, if it's not obvious, he writes down what everything's for right on his bank statement and then scans it and sends it to me. Perfect. I know exactly what he means. And it's real easy for him. It takes him 5 minutes. I have people that bring me boxes of receipts. That's all they're capable of doing. Not everybody is a huge business entrepreneur. Not everybody has a degree. And some people are artists and they're really bad at that stuff, especially my artists, my graphic designers. They're like, I don't know, but bring me the stuff. Keep it all. I mean, if that's the best you can do, that's the best you can do. Robyn has an amazing spreadsheet. Robyn she's the queen of spreadsheets. She will make you a spreadsheet for your business that you can fill out if that is what you're inclined to do. And there's a ton of software out there. And Robyn, I think I'm going to forget half of the software that we suggest people use. I know a lot of people use Square as a point of sale system. Square keeps track of all your sales, doesn't keep track of your expenses. Expensify, and there's a bunch of other receipt bank was another one that changed into something else where you just like, oh, business receipt, boom, grab that phone, take a picture, and surprise, it puts it in there. It takes all the information right off the receipt. AI reads it all. And then all you have to do is tell it what it was. Business lunch with Fred. It knows it was Applebee's. It knows how much it was. It knows how much a tip was. It can read all that right on the receipt. Amazing. Some of the AI stuff you can get. And a lot of this is free. A lot of people that have web stores use Shopify. And I don't really know exactly how it works. Robyn does, if you want to get into that a little bit. QuickBooks. We also interviewed people with, what was it, Xero, and what was the other one? FreshBooks. Do you want to just add some? You got to unmute. There you go. I'm going to take a drink while you talk.
Well, so there's the point of sales, like the Shopify and the Square. And like Diane said, they don't track your expenses. So they tell you one side of the story. They tell you your sales. They tell you what sales tax was collected. If there's discounts, refunds, things like that. But you still need to keep track of your expenses. That's where a box of receipts, or take pictures of your receipts, or if you want to use software, there's QuickBooks Online. There's some free software. Wave is one that you can put both sides of the story in the software, and because you need both sides. And so I kind of developed a system to take the information from the point of sales software and put it into whatever spreadsheet, QuickBooks, whatever, so that we have the whole story, not just how much was deposited in your bank, but how much your actual sales were and everything else that it was involved. So I'll give it back to you.
Thanks. Yeah, a lot of people go by their deposits, and your deposits are after the credit card company takes their fees. There's a lot of things that are missing when it comes to sales. And when you go to get a loan, the bank's going to want to know your sales. You don't want to give them a lower number, you know, after fees and everything. You want to tell them how much your sales really are, not after they take out 3%, and not after sales tax was deducted or whatever else. So You need to have accurate numbers if you ever decide to get a loan. Even, you know, like a basic Kiva loan, they require a lot more documentation now. I want to go over the law, just a hair. I'm going to touch on this really quick. Is what are you required to keep? What does the IRS say that you need to do? If you're a business, you're putting yourself out there by a business, what do you need to keep? The IRS says books and records. What does that mean? Records are things like bank statements, check stubs, receipts, invoices. You need to keep track somehow of what you're selling, what you're buying, what you're doing, where your money's going in and out, and some kind of original documentation for that. And that's records. And then books is somehow totaling it up. You don't have to have an amazing system of books. You don't have to have QuickBooks. You don't have to have Xero or any of these other guys, but you do need to have a system of adding it up, and other than giving it to your tax accountant and being like, here's your tax return, because what I do isn't everything. What Robyn does covers a lot more. Like what's on your balance sheet? What's your company worth? Are you profitable? I mean, tax law is made by congressmen who probably have never filled out a tax return in their life. And I've seen some pretty dumb tax laws come from congressmen. Accounting rules are made by accountants, and banks want to see accounting. They don't want to see a tax. They do want to see a tax return because they want to see that you're compliant, but they want to see the whole picture. And if you need assistance, like a loan from a bank or the SBA or Kiva or any of the other places, you need to have a good whole picture of your business. And that's where more than just a tax return. That's all I do. After that, I don't audit everything. So, books and records. Go ahead.
I will say that if you're a Schedule C business, or if you're under the threshold with partnership or S corp, you don't have a balance sheet on your tax return.
That's true.
So
you're not required to report it.
So the bank's going to want to know. Yeah, they want to know your income, but they also want to know what assets do you own, what loans do you have outstanding, how much is your business worth, and that's
how much skin you have in the game too. How much of this is
right.
money that you invested, and how much of it is debt? If your entire business is financed by debt, you're not going to be they're not going to give you another loan. I mean, you got to have some skin in the game. You've got your business. You have to have some equity. So that's a big thing. All right, couple things what to keep. One of the things that I didn't touch on is a lot of people are like, well, I do sourcing, which a lot of people resell stuff, flea markets, that kind of stuff, or buy or upcycle. Is that the word I'm looking for? Or they take junk and it costs them practically nothing, and they fix it up with something and resell. Okay, that if you are getting a lot of stuff for free, or buying a lot of stuff on Facebook Marketplace or Craigslist or dumpster diving, you have to still keep track of that stuff. Even if it has a value of 0, you should keep track of everything you pick up out of the dumpsters. If you, because it's worth something after you add value to it. So you need to at least, well, where are you getting all this stuff? You need to show that you picked it up for nothing. And if you buy a lot of stuff for cash on Craigslist, or well, I guess most people use Facebook Marketplace now, and you're paying cash, take a screenshot of what you're buying. Just screenshot your phone and keep it with your receipts. Keep track of your cash transactions. It's really hard to keep track of that stuff. It's like, I was like, well, why'd you take money out of the bank 6 times this week? Well, I was sourcing. Well, what did you buy? I don't know. I get that a lot. I don't remember. That was last year. I'm like, take pictures. Things that don't get written off that people always want to write off is, I bought a car, let's write it all off. No. Here's all my credit card payments, I'm going to write them off. It's an expense. It's a business expense. No. And then my car, my home office, you can't always write everything off. There's rules, especially when it comes to payments. If you go to I'm not going to go into this because I wrote a really good blog post on this. It's like, why can't I deduct my credit card payments? I really suggest you read that, because you spend payments. The expense was when you bought whatever was on the credit card. So yes, I need your credit card statements. I need everything that you charged in the first place, not how much you're making in payments. You don't get to deduct it twice. There's also some blog posts on how to deduct your car, how to deduct your home office. So I'm going to just say, just read my blog. Just anything that's business related, just go through, just read on my blog. You'll learn so much and you'll ask a lot less questions. So I guess that's all I have for right now. I'm happy to take questions. Robyn can take questions. If you don't want to, they should have my contact information. Robyn's, you can text me, email me. I don't know if Robyn's up for that, probably. Text and email. I love questions. That's where I get my ideas from my blog posts.
I'm gonna put my contact information in the chat.
Awesome.
Okay.
Yeah, Diane, why don't you also put your contact information there in the chat, guys? I've been putting stuff from Diane's website throughout this whole entire presentation. So if you click on any of those links, you're going to be brought to her grassroots page. And like she said, she has a great blog. There's a lot of resources on there that can be really helpful for you guys, for anyone. I'm going to say thank you to Diane and Robyn for offering to field questions via email and stuff like that. So if you guys want to reach out to them, you can. We've also dedicated these last like 7 minutes or so. If you do have questions, we'd love to answer them right now in the session. That's what we're here for. And while I'm stealing some airtime here, I'm also going to say that we do have expert office hours. So having someone like Diane or Robyn be able to look at what you're doing currently and work with you through some of these steps is really helpful. So what I keep hearing them say is people come to them at the end, right? And are like, here's what I have. But if you're able to, in your process of looking at starting a business or thinking about doing something and start the right way, it's probably a lot more beneficial, right? And so if you're even midway or partway through, that's what our office hours are intended for. They're like a checkpoint, right? And there's also lawyers and different people we can connect with if that comes up. So I just want to say that I'm going to plug and put in our office hour link. If you want to sign up and specifically want to have time, go ahead and do that. And then, okay, I'm going to stop talking. So if we have any questions for Diane or Robyn, or if you guys have anything else to say, go ahead and
unmute.
unmute.
Question from Carrie that says, can you explain the tax advantage to incorporating? You know, I did not get to that. I kind of ran out of time there with the self-employment tax. After you take all your business deductions and you have your profit from your business, when you're self-employed, you are also, on top of income tax, taxed self-employment tax, which is 15% on top. And that goes to Social Security and Medicare, not your general income tax. Generally, from your paycheck, you pay 7.5%. Your boss pays the other half. Guess what? You get to pay both halves. 15% self-employment tax. The tax advantages to incorporating, when I get to taxation, that is it, is limiting the amount of self-employment tax by making you an employee of a company. And having, remember I said the 3 hats? Okay, the other 2 hats are getting paid. The investor hat is getting paid dividends, which are regular, ordinary income. And the employee, which is a much smaller amount, where we decide based on how much you made, is your salary, which is subject to self-employment tax, or the same amount of tax as you would pay a self-employment tax. So that's how we save money. There's a lot of scams out there. It's called shifting income or whatever. There's a lot of websites, but basically they're incorporating you. So don't use a weird website. Use me. I incorporate people all day long.
And another way it helps on your taxes is your wages. If you're an S corp, your wages to yourself are a business expense.
Right.
And that can make a big difference.
Awesome. I want to say thank you real quick to Diane and Robyn for being here. Thank you guys. It's awesome to have your time, especially during a busy season. We appreciate you being here. Thank you so much.
Thanks for having us.